Stocks finished the first quarter at all-time highs, and even the beleaguered Nasdaq is rebounding, but will it continue? In this episode, we'll look at catalysts for stocks in April, plus we'll take a look at the SPAC marketplace and the #1 performing asset class, core asset class. You're going to be surprised. That and much more right after this. I'm DeLegge with ETFguide TV. Thank you for joining me. I got a few charts that I want to share with you about the latest trends within the stock market. We're going to examine the big three indexes, the S&P, the Dow, the Nasdaq 100, and the ETFs tracking them. We'll also take a look at some of the sector ETF trends, plus ETFs tied to commodities, which have been doing quite well. And then finally, we'll take a look at April and the catalysts in that particular month for the stock market's next move. Is anybody watching this at, near, or already retired? Because if you are, I've got a new ebook titled 60 Smart Ways to Retire Better, covering key topics like how to maximize Social Security, avoiding distribution pitfalls, and I know you're going to enjoy it. It's free, and the download link is provided below, so get your copy. So let's take a look at chart number 1, the CNN Fear and Greed Index, which now is at neutral readings. And usually when the stock market is hitting all-time highs, as we've seen the Dow and the S&P 500 doing, you'll usually see extreme greed readings. But right now, we're not seeing that reflected in the latest CNN Fear and Greed Index. This index, by the way, may look rather simplistic, but it's actually made up of 7 sub-indicators like put and call ratios, as well as market volatility, also safe haven demand. And so it's got some muscle behind it, and it gives us a real excellent snapshot of the market's mood. So right now we're at neutral readings. We've seen a nice rebound in the Nasdaq 100 ETF. That's a triple Qs from March lows. It's in positive territory for the year. But you'll notice it's still trailing both the S&P 500 ETF, SPY, and the Dow, DIA. Of course, the Qs are heavily weighted toward technology stocks, and as a sector, they have been laggards. But if the triple Qs can rebound and continue to rebound, they may end up catching the S&P and Dow. And we're just beginning to see that move in the right direction. And we're also heading into a seasonally favorable period for stocks. So that could be just the thing that helps the triple Qs find their mojo. This next chart takes a look at the riskiest places within the stock market right now. The IPO ETF, which tracks newly launched publicly traded companies, and then SPAK, which tracks blank check companies that go public via a reverse merger. And you'll notice both areas are underperforming the broader U.S. stock market ETF, SCHB. Keep in mind that the individual stocks held inside both SPAC and IPO are much more volatile versus the ETFs tracking these very same areas. So that, by the way, is both on the upside and the downside. And there are many individual IPOs as well as individual SPACs that are down 20% or more. And depending on the industry group or sector, some, for example, in the EV or electric vehicle and battery market have lost more than half their value and been absolutely creamed. So that's just some perspective. There is some underperformance we're seeing in some of these higher risk areas within the stock market. So there's been a lot of talk about inflation and it being higher, and that's been lifting commodity prices. And this chart shows us the performance of ETFs tracking the 4 major asset classes side by side. This is a year-to-date chart. You'll notice USCI, which tracks a basket of 14 commodities. It's outperforming stocks, bonds, and global real estate since the start of the year. Some market observers have been talking about a potential for a commodities super cycle. They don't happen very often. I mean, going back 100 years, there's only been really 3 or 4 bona fide commodity super cycles. Each was tied to something very transformational happening in terms of the economy. We had, for example, the rapid industrialization of the U.S. in the 1910s. Then we had the reindustrialization of Germany and Japan following World War II. And of course, the growth in those BRIC countries like Brazil, Russia, India, and China in the early 2000s. So if there's a new commodities super cycle underway or emerging, it's still too early to say for sure, but definitely the short-term trend in commodities looks really good right now. The one exception I will say is precious metals have been lagging. Gold just had its worst quarter going back to 2016. So gold has really lagged and not participated. But those energy commodities like crude oil are doing quite well. Looking ahead to April, because we're all wondering, well, what comes next? It's been a good month historically for stocks. Only the month of November is better than April. And if we take a look at the S&P 500 going all the way back to the 1950s, it's enjoyed strong gains during the month of April. Now, when do those gains actually happen? Well, this chart takes a look at that question, and really it's during the first 18 days of the month historically that have been best for stocks in the month of April. And after that, stocks just go on vacation. They go on cruise control like a 1978 Cadillac for a smooth ride into May. One final look at S&P 500 by industry group or sectors. There's 11 industry sectors in the S&P 500, including technology, utilities, financials, healthcare. And if we just look at the S&P 500's sector performance, you'll see that we got all 11 sectors in positive territory on a year-to-date basis, 0 in negative territory. And so that's a pretty good sign. You want to see that if you're a bull, broad participation by all industry sectors. And that currently is the current trend that we are seeing in the stock market in terms of industry sector performance and price action. So a couple key takeaways. Sentiment towards stocks is bullish, but it's not extreme. We see the Fear and Greed Index, it's neutral, which is quite interesting because stocks, as far as the Dow and S&P 500, are at all-time highs. Nasdaq is trying to catch up. It's making some noise, so we'll see if it can build on its recent gains in the month of April. Certainly, that's been a positive month historically for the overall stock market. So I'd say if technology stocks are going to make a run, this would be the time to do it. And then one final thing, and I think this is very important, is the timing of your safety net, right? We talk about the importance of having an adequate cushion inside your investment portfolio. And in terms of when to implement that, right now is the most favorable, ideal climate to implement your portfolio's margin of safety. You do it when the sun is shining. It's better to do it now versus waiting for the market to correct and scrambling like everyone else, trying to sell assets when they're falling in price. That's not a very ideal time to be incorporating a margin of safety. So take a look at this right now, shore up your investment portfolio. And I've got a margin of safety worksheet available to all of you in my online classes. I've got a link to that below. And those of you too that would like me to analyze and grade your portfolio, I'll test your portfolio strengths and weaknesses. You can get in touch with me at portfolioreportcard.com. So how did you enjoy today's episode? Well, be sure to hit the subscribe button. Don't forget to check out the links below. Again, I offer online classes, portfolio grading service, and I look forward to seeing you next time. I'm DeLegge with ETFguide TV. Take care.